All right, let's get right into it. Today, we're doing a deep dive with a very specific focus, a concise, data-driven intelligence report on the Noida real estate market built for institutional investors who are looking at the 2026 cycle. Let's begin.
Here's how we're going to break it down. We'll start with the huge structural shift happening in Noida's economy. Then we'll look at the infrastructure that's supercharging everything. After that, we'll pinpoint the specific areas seeing the most action, check out the commercial engine that's fueling all this growth, and finally, we'll wrap up with a clear verdict on the risks versus the rewards. So, Section 1. Let's start with the core idea here, the main thesis. Noida is not the speculative satellite town it used to be. Not anymore. It's matured into a real, honest-to-goodness economic powerhouse. And the scale of this change is just massive. I mean, we're talking about Noida contributing a full 10% to the state's GSDP. That's a fundamental pivot. It's moved away from just short-term, speculative flipping to something much more stable, long-term institutional consumption. This economic muscle is really the bedrock of our entire investment thesis. This brings us to a really crucial concept, something we're calling the infrastructure first sequence. Now, what is that? Well, typically in India, you see housing pop up, and then years later, the roads and metro lines struggle to catch up. Noida has flipped that script completely. Here, the big ticket infrastructure, the airport, the expressways, the transit lines, was built first, before the big wave of residential demand. What that does is it de-risks the whole proposition and locks in asset value right from day one. Okay, so that brings us to Section 2. How does this infrastructure first idea actually play out in the real world? Here, we're going to focus on the catalysts, the key projects that are literally rewriting the rules on property value and investment timelines. And this is the big one, the absolute game changer. The Noida International Airport. You have to think of it as a massive force multiplier. Its launch on March 28, 2026 is set to take what would normally be a 10-year appreciation cycle and squeeze it into an incredibly intense 36-month window. This just shatters the old models for holding periods and opens the door for seriously accelerated capital gains. But this isn't just about people getting on and off planes. The airport's 5-kilometer impact zone is giving birth to a whole new self-contained economy, an aerotropolis. The maintenance hubs, the cargo centers, these are creating thousands of high-paying technical jobs. And what do all those people need? They need high-quality places to live, creating an instant organic demand for top-tier residential townships right next door. So yeah, the airport is definitely the star of the show, but it's not a solo act. It's backed up by 3 other critical pillars of growth: the Faridabad-Juar Expressway, the Ghaziabad-Juar RTS rail line, and the Aqualine Metro extension. You put these 4 together, and they are completely redrawing the economic map of this entire region. I mean, just look at the efficiency gains here. The Faridabad-Juar Expressway takes what was a 2-hour journey and crushes it down to just 20 minutes. That's not just a nice to have. It creates a very real, very measurable logistics premium for industrial land because it plugs Faridabad's manufacturing base directly into the airport's global cargo network. And it's the same story with the rail lines. You know that last-mile connectivity problem everyone talks about? The high-speed RRTS and the metro extension are designed to solve exactly that. This creates what we call a transit-oriented development premium, which you can see in the 12 to 16% price bump. It also makes rental yields much more stable and pulls in a steady flow of mid-income professionals. So, what's the result of all this? Well, you can see it right here in the data. A staggering 130% price growth along the Yamuna Expressway. That's just blowing the city average of 40% out of the water. The big takeaway is that capital appreciation here isn't a guessing game anymore. It's become deterministic. It's tied directly to how close you are to these top-tier infrastructure projects. Let's actually drill down into these numbers. The infrastructure premium, which is the growth above the city average, is a massive 90 percentage points for the Yamuna Expressway. Even in a more established area like Sector 150, you're still getting a 30% premium. The data couldn't be clearer. That airport effect is hands down the most powerful force driving value in this entire cycle. All right, so we've looked at the big picture, the macro drivers. Now let's zoom in. Section 3 is all about where the rubber meets the road, these specific investment hotspots that are popping up in the residential market right now. First up, Sector 150. People call it Noida's green lung for a reason. A full 80% of it is mandated open green space. This is where you'll find the really premium wellness-focused developments from the big players like ATS, Godrej, and Ace, with prices already pushing up to 15,000 rupees per square foot. And this image really highlights a split in the market. You've got two completely different plays here. On one side, you have the ultra-luxury segment, with developers like M3M and Mahagun creating these legacy assets for long-term generational wealth. On the other side, you have these high-beta, high-growth pockets along the Yamuna Expressway. These offer explosive, speculative ROI potential that is directly tied to the new airport. It's two very different strategies. Okay, now let's talk about what we're calling the tech and GCC spine. Think sectors 143, 144, and 146. These areas are feeding directly off the big corporate campuses. Because they're so close to where people work, they're delivering some of the highest rental yields and strongest capital growth in the city. You're seeing great projects from Godrej, Gulshan, and SK Group really leading the way here. So where's the real action? Where's the market moving fastest? It's right here, in the 1.8 to 3.5 crore price band. We call this the market's sweet spot, or its velocity engine. With a quarters to sell ratio of just 3.9, it tells you that homes are selling fast. Demand is clearly outrunning supply. This segment is being driven by professionals who are trading up, and it's nicely insulated from the affordability crunch that's hitting the lower end of the market. Okay, so all that residential demand has to come from somewhere, right? That brings us to Section 4, the commercial engine that's really driving this whole train and pulling the residential market right along with it. And I mean, the numbers here are just off the charts. We're talking a historic 10.9 million square feet of commercial space being snapped up. And it's concentrated too. Sector 142, by itself, grabbed over a quarter of all new leasing in just the first quarter of 2026. A huge chunk of this is being driven by what are called Global Capability Centers, or GCCs. These are the big offshore units of multinational corporations, and they now account for a whopping 45% of all office demand in the entire NCR. And here's the magic. This is where the commercial and residential stories lock together perfectly. All those new corporate offices directly translate to higher rental yields for residential properties. Being close to these GCC hubs is pushing rental yields to between 5 and 8% in these key sectors. That's way above the national average, and it's because you have all these high-income corporate employees competing for a place to live. All right, let's pull all of this together. Section 5 is the bottom line, a clear-headed, balanced look at the incredible opportunities in this market, and just as importantly, its critical weak spots. Look, any serious analysis has to look at the downsides. So to maintain credibility, we have to be upfront about the risks. We're tracking 3 primary red flags. First, there's hydrological stress. Some parts of the expressway are facing serious groundwater shortages. Second, there are ongoing legal battles around the stalled sports city projects in Sector 150. And third, there's a potential risk of oversupply in the super premium 5-core plus segment, which could slow things down. Okay, so keeping those risks in mind, here's our actionable framework for the next 3 to 7 years. We've categorized the Yamuna Expressway corridor and the GCC hubs around sectors 142 and 146 as aggressive buys. We see Sector 150 as a selective buy, great lifestyle value, but you have to do your homework on the legal status of each project. And importantly, we are flagging Sector 151 as an avoid for now. There are just too many land acquisition disputes and execution risks there. And that brings us to our final slide, a summary comparison to really put everything in perspective. This is your cheat sheet for 2026. It lays out the primary driver, risk profile, pricing, and ROI forecast for each key pocket. As you can see, if you're chasing the absolute highest potential ROI, the Yamuna Expressway is in a league of its own. But for a safer bet with a great balance of institutional stability and high yields, that GCC corridor is probably the most resilient play. The crucial point is this:
Noida in 2026 isn't one single market. It's a collection of distinct high-performance micro-markets. So the question for investors is no longer if you should invest, but precisely where you should align your capital to ride these powerful, deterministic waves of growth.